Yesterday, we did part 1 of Alexander Green's Next Magnificent 7, and today we're finishing up this presentation with the last 3 stocks. Here's the clues for stock number 5. People often ask me if AI is just hype. Well, here's a perfect example of a real-world application that is increasing productivity and generating billions in economic activity. Our 5th Next Magnificent 7 stock is a developer of AI software and robotics for supply chains in the United States. Its robots can navigate giant distribution centers at speeds up to 20 miles per hour, stocking and retrieving goods in a fraction of the time compared to old technology. In short, it moves goods with unmatched speed, accuracy, and efficiency. And this AI company packages, stocks, and ships out goods for some of the biggest retailers in the world. The company works with Albertsons, the second largest grocery chain in North America. It partners with Target, the 7th largest retailer in the country. But here's the big one. It just signed a huge deal with Walmart, the number 1 retailer in the country, to install systems in every one of Walmart regional distribution centers nationwide. This is Symbotic, ticker SYM. Here's what to know about this stock. Symbotic, founded by Rick Cohen, is transforming the warehouse and supply chain industry with its AI-powered robotics. The company tackles persistent challenges such as labor shortages, rising operational costs, and inventory inefficiencies by offering a fully integrated end-to-end automation platform. Its technology includes fleets of mobile robots, intelligent software, and high-density storage systems designed to handle both pallets and individual cases. Symbotic has forged marquee partnerships with retail giants like Walmart, secured under a 12-year exclusive deal, along with UNFI and Albertsons, giving it a dominant footprint across North America. The company has seen explosive growth, boasting a $37.3 billion market cap, a stock price up 165% year-to-date, and an impressive $22.4 billion order backlog. Recent milestones include recognition on the RBR 50 Innovation Awards 2025 list, being named one of the Boston Globe's fastest-growing companies, and unveiling new battery technology with 6 times the energy capacity, 40% less weight, and 10 times the lifespan of previous models. In its Q3 FY 2025 results, Symbotic reported 36% year-over-year revenue growth and maintained its $22.4 billion backlog, though it continues to face persistent net losses and is still addressing financial restatements from fiscal year 2024. Symbotic has built a formidable competitive moat through its proprietary AI robotics integration, including its breakthrough BreakPack solution and next-generation storage systems that reduce installation times while dramatically boosting throughput. Backed by more than $12.4 million in annual R&D spending, the company maintains a strong pace of innovation. Its revenue growth has been explosive, with 36 to 52% year-over-year gains in recent quarters and projections, showing revenue climbing from $1.79 billion in fiscal year 2024 to $3.61 billion by fiscal year 2027. Long-term strategic partnerships, most notably with Walmart, including expansion into Mexico through Walmex, position Symbotic as a leader in the $350 billion warehouse automation market. Financial health is also improving, with gross margins rebounding by 400 basis points quarter over quarter, software margins rising to 65%, and the company holding more cash than debt. Analysts expect profitability to emerge, forecasting EPS growth from 24 cents in fiscal year 2025 to 71 cents by fiscal year 2027. Symbotic is also expanding into high-growth verticals such as in-store fulfillment, perishables, and high-velocity distribution centers, while its stock has surged 118 to 165% year-to-date, cementing its status as one of the top AI and robotics plays. Its end-to-end automation and AI orchestration create a deeply integrated, high-switching cost ecosystem, reinforced by multi-year contracts and a rapidly growing backlog that strengthens its long-term competitive advantage. Symbotic faces several execution and concentration risks that could challenge its rapid growth story. The company's revenue stream is highly concentrated, with 98.6% coming from the U.S. market and Walmart representing a disproportionate share of its expansion, leaving Symbotic vulnerable if that partnership's dynamics were to shift. Despite strong top-line growth, the company remains unprofitable, reporting a $21 million net loss in Q2 fiscal year 2025 and continued operating losses even as revenue surges. Earnings estimates have trended downward, with fiscal year 2024 EPS expectations revised to just 8 cents. Execution has also been uneven, with project delays, cost overruns, and margin pressures emerging as growth accelerates. High upfront costs, ranging from $5 million to $15 million per facility, limit the appeal of Symbotic's solution for smaller operators. Additionally, the company's relatively short operating history, it was founded in 2018 and went public in 2023, means it has limited experience managing complex, large-scale deployments, especially outside the U.S., where its presence remains minimal. Investor confidence has also been tested by fiscal year 2024 accounting errors that required restatements and fueled stock volatility. Analyst price targets now range widely from $10 to $60, reflecting uncertainty about execution at scale. Ultimately, Symbotic's rapid growth without profitability raises questions about sustainable unit economics and whether it can maintain operational discipline while scaling. This is another watchlist stock. I know some viewers get upset when I cover stocks I don't want to buy at the moment, but I don't want to buy most stocks. Simobit seems like it could be a great company, but its stock price is too expensive and at all-time highs. You have to exercise patience with stocks like this. Here's the clues for the sixth stock. One of the biggest dangers with AI is that criminals will use it to steal people's identities and hack into company systems. Billions will be spent on cybersecurity as a result. Morgan Stanley reports that the industry will grow from $15 billion in 2021 to $135 billion by 2030. And our sixth, next Magnificent Seven company is using AI to fight these cyber criminals. In short, they've built an AI technology that instantly authenticates and verifies authorized users, and it blocks the cyber criminals out. The company is absolutely exploding right now. It's signed up 8,000 customers, including some of the biggest brand names in the world. The company provides cybersecurity for American Express, BP, Deutsche Bank, UBS, Suncor, MetLife. This is CyberArk, ticker CYBR. Here's what to know about this stock. CyberArk Software is a global leader in identity security and privileged access management, playing a critical role in protecting enterprises against increasingly sophisticated cyber threats. Founded in 1999 and headquartered in Israel, the company trades on NASDAQ under the ticker CYBR and has grown into a $24 billion market cap powerhouse, serving roughly 10,000 customers worldwide. Its platform secures billions of identities and leverages AI-driven capabilities to stay ahead of evolving attack vectors. Core features include secure single sign-on, adaptive multi-factor authentication, secrets and lifecycle management, user behavior analytics, and intelligent privilege controls, making it a trusted partner for organizations seeking to safeguard critical assets. Financially, CyberArk continues to show strong momentum, reporting Q2 2025 revenue of $328 million and annual recurring revenue of $1.274 billion, with $1.088 billion coming from subscription ARR. The company's stock trades around $505 per share, and 2025 guidance projects total revenue between $1.31 and $1.32 billion. A major recent development came in July 2025, when Palo Alto Networks announced its agreement to acquire CyberArk, a move that is still pending regulatory approval and could further reshape the cybersecurity landscape. CyberArk leads the identity security and privileged access management market thanks to its unmatched combination of innovation, enterprise-grade security, and proven scalability. Consistently recognized as a top provider, the company was named a leader in both the 2025 KuppingerCole Leadership Compass and the 2025 Forrester Wave for Privileged Identity Management. Its AI-driven threat detection and machine identity management capabilities enable organizations to defend against next-generation risks, including generative AI-powered and autonomous cyber attacks. CyberArk also delivers robust enterprise security with reliable privileged access controls, full session recording and auditing, and audit-ready compliance tools that integrate seamlessly with legacy systems. Policy automation at scale further streamlines security operations, making it easier for large organizations to maintain compliance. Beyond its technology, CyberArk has built a powerful growth engine with a global partner network, a highly scalable architecture, and custom connectors that simplify privileged session management across diverse environments. The company's strong revenue trajectory, positive cash flow momentum, and reputation for effective lifecycle management, ease of maintenance post-setup, and exceptional support responsiveness make it the go-to choice for enterprises seeking both security and operational efficiency. While CyberArk dominates the privileged access management market, it faces several areas for improvement that could impact adoption and long-term growth. Its cost structure is a frequent concern, as the per-user licensing model can create significant budget strain. Vault implementations alone often cost $100,000 to $150,000 annually, and additional fees for advanced features can quickly compound expenses. Pricing is less transparent compared to some competitors, making it challenging for small and medium-sized businesses and budget-conscious enterprises to justify the investment. Implementation complexity is another hurdle. Deploying CyberArk often requires specialized expertise, multiple virtual machines or physical servers for high availability, and substantial storage for session recordings. The initial configuration process can be challenging, with a risk of overcomplication and inefficiencies if not managed carefully. Day-to-day operations can also encounter friction, including limited automation capabilities, inefficient APIs, and challenges with custom connectors. Some customers have reported inconsistent support response times, as well as connectivity and dependency issues. Beyond the technical aspects, additional concerns include potential stock overvaluation. Recent DCF analysis suggested shares may be overpriced by about 40.6%, and internal questions about senior leadership effectiveness. CyberArk also faces mounting competitive pressure from emerging vendors offering more agile, cost-transparent solutions with simpler deployment models, which could erode its market share if it doesn't continue evolving its platform and customer experience. Here's the clues for the last stock. The final, next Magnificent 7 stock is also in biotech, because I've seen more opportunity there than in any other industry. And this is a stock I highlighted as my number one stock in the entire market going into this year. The company operates in a new technology that was only invented just over 10 years ago. It's called gene editing, and it won the Nobel Prize for Chemistry in 2011. But now, thanks to AI, its development is going into overdrive. In short, gene editing is allowing scientists to make precise changes in the DNA of living cells, and it will create new treatments for genetic diseases like muscular dystrophy, Huntington's disease, hemophilia, cancer, infectious diseases, and more. It's unmatched and unparalleled in science, according to Brad Rangessen, the executive director at Cal's Innovative Genomics Institute. This is CRISPR Therapeutics, ticker CRSP. Here's what to know about this company. CRISPR Therapeutics is pioneering the next generation of gene-based medicine, leveraging groundbreaking CRISPR/Cas9 and CRISPR-X platforms to tackle some of the most serious and complex diseases. Founded in 2013 and headquartered in Zug, Switzerland, with key operations in Boston, the company has emerged as a global leader in gene editing innovation. Its portfolio includes 1 approved therapy, 5 clinical programs, and 10 preclinical programs as of 2025. CRISPR Therapeutics made history with Casgevy, the world's first approved CRISPR-based therapy for the treatment of sickle cell disease and beta thalassemia, marking a landmark moment in precision medicine. Looking ahead, 2025 is shaping up to be a pivotal year with several key catalysts, including positive phase 1 data for CTX310, a promising cardiovascular therapy, advances in alpha-1 antitrypsin deficiency through its synthase platform, and multiple anticipated clinical trial readouts that could expand its pipeline's potential. Financially, the company remains well-positioned with $2.02 billion in total assets as of Q2 2025, while its stock peaked at $72.95 in October 2025 amid rising investor interest. As the gene editing market is projected to grow to $24.91 billion by 2031, CRISPR Therapeutics stands at the forefront of a transformative era in medicine. CRISPR Therapeutics holds a commanding position in the gene editing space, driven by its first-mover advantage and innovative technology. The approval of Casgevy, the first-ever CRISPR-based therapy, firmly establishes the company as a pioneer in addressing critical unmet needs in genetic diseases such as sickle cell disease and beta thalassemia. Its pipeline is highly diversified, with programs like CTX310 showing promise in cardiovascular applications, and its AATD program highlighting the versatility of its CRISPR platforms across more than 15 active programs. Strategic partnerships, particularly its collaboration with Vertex Pharmaceuticals, strengthen commercialization efforts, broaden market reach, and reduce development risk by leveraging shared expertise and resources. CRISPR Therapeutics has also earned significant industry recognition, including Time's Best Inventions of 2024 and being named a Fierce 50 Innovation honoree the same year. With over 25 companies now participating in the CRISPR ecosystem and the global gene editing market expected to grow at a compound annual rate of 8.88% through 2031, CRISPR Therapeutics is well positioned to remain at the forefront of a transformative revolution in healthcare. CRISPR Therapeutics faces several growth-related challenges that could weigh on its path to long-term profitability and market stability. The company continues to operate at a significant loss, reporting a $208 million net loss in Q2 2025 and a total loss of $345 million in the first half of the year. While its heavy R&D spending is essential to advancing its pipeline, it puts pressure on near-term profitability and strains its cash runway. CRISPR Therapeutics is also highly dependent on its partnership with Vertex Pharmaceuticals for the commercial success of Casgevy. Any disruption to this collaboration could have a major impact on revenue and strategic direction. Financially, the company's total assets have declined to $2.02 billion from $2.33 billion the previous year, reflecting the cost of sustained clinical investment without a robust commercial revenue base to offset it. The company's future also hinges on clinical and regulatory milestones, with multiple 2025 trial readouts acting as binary events that could either accelerate growth or trigger stock volatility and shake investor confidence if results disappoint. Additionally, the competitive landscape remains intense, with rival CRISPR innovators and new gene editing technologies emerging rapidly, forcing CRISPR Therapeutics to continuously innovate to maintain its leadership position in a fast-evolving market. Biotechs are always risky, but this is one of the few stocks mentioned in this video, not at all-time highs or close to all-time highs. I still would hold off until the price is a little better, but this stock probably has the most upside out of these 7. Before you go, don't forget to grab my free report. The 10 stocks I believe you can buy today and hold forever. It's packed with solid long-term picks you won't hear hyped up anywhere else. Just click the link in the description, enter your email, and I'll send it straight to you.